Hello and good morning, listeners. Welcome back to Almus Market Mornings. And today we have a special guest appearance by our very own Pankaj Rathi for the Market Mornings. Pankaj, first round of Trump was somewhat cheered by the market participants as there was not much of an update on the tariff front. But although market participants are still preparing for another round of it. On the UK front, debt interest costs more than doubled while ECB chief suggests Europe to be prepared for any tariff that's been levied on Europe. On the domestic front, market participants are expecting a massive payout by the RBI for the government, while the Indian rupee is also seeing to follow the Asian markets with respect to the currency movements. What's your take on such developments, Pankaj? Also, what are your expectations from the financial markets in the coming days?
Thank you, Shikhar, and it's a great opportunity for me to back for maybe a day, but it's always better to interact with your or virtually interact with your customer, clients, and prospects. So, good morning, everyone. I think we are back to Tweetonomics, Trump's Tweetonomics after 4 years. What we saw yesterday was a renewed concerns about that Trump talked about levying some tariffs on Europe and China. It's not very clear, but let's see how it unfolds. Besides that, Wall Street Journal reported yesterday that Trump is threatening sanctions tariffs on Russia if Putin won't end war in Ukraine. Now, the president urged the Russian leader to make a deal, writing, such measures would go after the heart of the country's oil industry that has so far sustained Moscow's ability to wage war. What they are trying to say that basically the oil which has routed through either China or India, that will all come under the sanctions. What exact words we have used, sanctions against third country could also be part of the toolbox, including Chinese refineries that are buying Russian oils or Indian ports that are offloading Russian oil. For Putin, however, geopolitical goals are more important than economic stability, limiting the impact of any new measures. This was all reported by Wall Street Journal. The above was enough to trigger a reversal in bond prices to the lower side and halt any corrections in the dollar. What basically means there is some kind of a support on the yields or yields might move higher back. However, we still believe that these are negotiating tactics, though volatility is likely to persist in currencies and bonds. We coming back to UK, where we are seeing that the fiscal positions are still very tight. Growth is not so much of a promising, and borrowings again higher than expected. We have a BOJ meeting tomorrow. Now, BOJ meeting is basically these days BOJ meetings have become unpredictable. As of now, there's a close call between high or no hike. What we believe, if there is no hike decision tomorrow on the interest rates, yen might become again weak and may surge towards 158 or even 160. What we are seeing, there is some recovery in euro happening. It's a shallow recovery, but it's still continuing to move higher slowly and steadily. And it's basically, we believe that this is a technical shift which happened during the month end, and euro was in an oversold position for very, very long. So we might see closer to 1.05 on these upticks. GBP also held yesterday, could not make a much move because of a correcting dollars. In expectations of a very high tariffs, people have created a long USD CNH positions in last couple of months, and that's weighing on a basically dollar CNH, and it's seeing for some correction. We believe that 7.23, 7.22 itself will be a good hold. Overall, we expect the dollar to range in a higher band, but continues to be subject to news flow or maybe a tweet flows from White House. Yesterday, there was some rupee flow was there. Rupee means dollar flows in Indian market, some corporate flow, and which had broken into a near term or slight low. But our sense is that 86.20, 30 as of now will hold unless until we see a euro moving towards 1.05 and crossing 1.05. FPI sellings in Indian equities market continues. They have already sold closer to 60,000 crores in this month itself. There won't be much of a recovery in Indian bond market. At the same point of time, S&P 5, there's not much recovery in Indian equity market. At the same point of time, US S&P 500 is close to all-time high. They closed at 6086, crossing over 6100 becomes a new high in the S&P 500. As I mentioned earlier, I don't see rupee breaking 86.20 during this week because Indian currency as of now is being impacted by a very strong dollar. At the same point of time, there is if you look at the RER valuation model, we are overvalued. So let's see how it unfolds from there also. Oil is staying close to 80, but there's some resistance in oil, and we believe that the range is the 75, 82 on the crude oil. What Indian markets would be observing in coming days, it will be a budget which is likely to get a good amount of a dividend. My sense is it is a $3 trillion which RBI might be able to declare. But in budget, what they would be putting up some conservative number, because RBI dividend will come somewhere in May, June, July, not before that, because RBI has got a closing of a 31st March. But there could be some budgetary expectations which could be in between 2.25 to 2.50 trillion rupee. But actual number can be more than $3 trillion as well. We don't expect any rate action in coming monetary policy in the first week of February. I might personally believe that RBI will be holding rates till that time dollar stabilizes. That's all from us today.
Okay, great. And yes, folks, although the first round was not having any threats by the new US president-elect, but Trump is definitely threatening to impose tariffs or sanctions on Russia, including the sanctions via third country, all to end the Russia-Ukraine war, as they say. Also, a no hike scenario tomorrow by the Central Bank of Japan, may push the yen on the weaker side again, as expectation of the rate hike is also quite close to the no hike scenario. The month-end rebalancing of the currencies have also provided some sort of support, along with the DXY uh, correction or moderation, which made euro move towards 1.0450 levels yesterday. But it's the financial markets which will continue to have influence a lot by the tweets, and that's how Pankaj was mentioning that Tweetonomics will now take the center stage. On the domestic front, USD INR is expected to remain in range, although there is a good pressure by the dollar strength, and the RER valuation also suggests of a weaker rupee. But it was the Asian currencies which was being followed, and there's not much of recovery in sight for the Indian equity markets as well. That's why the FII flows are not really in sight as of now. On the budget front, as Pankaj mentioned, there can be an expectations of a dividend payout by the central bank in the tune of 2 to 3 trillion rupees. Now, that's a massive amount which can help further the reduce, or some sort of moderate the kind of fiscal deficit the government is expecting. On the interesting front, folks, just before I close, I'd like to bring your notice to the fact that Bitcoin's market capitalization has now reached to $2 trillion. And this has doubled in just last 11 months. Rather, we can also see the kind of return on the market cap. On the CAGR basis, Bitcoin has given from 2016 is a staggering 97%. Uh, it is definitely one of the best performing assets on the financial markets as of now. Whether to be taken it as an asset or how, it's an individual's prerogative. And over here, I shall end today's updates, and we shall come back again tomorrow with another round of updates. Thank you so much for listening in, folks.